Well, thank you so much, everyone, for being here on our July Bay Area housing market update. I know we were supposed to do it every month on the second Thursday, but summer is a very busy time for a lot of people. And we're just so grateful that Stacy and Mitchell today, they're able to make it to our webinar. And we had a conversation the other day at our coffee chat with Stacy about commercial real estate loans. And then we just got into it so much that I was like, oh my God, we really have to share all this information with our audience. So I'm really excited about today's topic, especially with all that's been going on in the economy, what's going on with politically. But a lot of things are affecting our residential and also commercial real estate market. So let's get into it and let's start talking about it. But first of all, I want to introduce you guys to our team, HAYLEN Group. I have been with HAYLEN Group for the past 14 years now. I've been in the business for about 20 years, 21 years actually. And I started HAYLEN Group about 12 years ago. And very shortly after that, Susanna had joined me, and also Peter, who is my brother-in-law as well, joined me. And we truly believe that we can serve all of our clients, both residential real estate and also in commercial real estate. So we're going to get into it a little bit more. I know our company is a little bit unique where we're not really just focused on residential, but we are really doing both residential and commercial. And we've been very successfully helping a lot of our clients transitioning from residential real estate investing to commercial real estate investing. And then we also had Anthony, who's been with us since I believe it was 2016. It's been 10 years now. And we also have Jacqueline and Hanali, who have been with us for a bit, around 1 year recently. We are a very small team, but we are very, very strong and powerful team. Most of our businesses came from referrals, and we truly value our partnership with our other vendors and also our past clients. And how do you stay connected with us, with HAYLEN? We are, of course, you can see us on our website. We have blog posts. We do live workshops, investment workshops. We have our monthly coffee chat in Campbell at Philz Coffee in Campbell on Bascom. And we are also on social media on Instagram and TikTok, Facebook, and LinkedIn. So please find a way to connect with us. This video, or this webinar, I should say, is going to be posted on YouTube as well, and also social media as shorts or reels or long form format. So it depends on how you would like to digest your information. All right, so now that the introduction is done, I want to dive into these market stats. This is something that I love sharing, numbers. I like sharing charts. I always look at the charts, look at the numbers, and I'm just like wondering, what does it mean? So we're gonna start with our residential markets first. And we are combining the 5 counties in the Bay Area data: Alameda, Contra Costa, San Francisco, San Mateo, and also Santa Clara counties. And we look at what is the number of active listings versus a number of sold listings. So as you see that the number of active and number of sold, the gap around the summertime is rather large. And then towards the end is lower as we are having a less demand, but the supply drops drastically, typically. So a lot of times that we have less buyers, but we also have less supply on the market. So therefore, we sometimes still see quite a bit of, if there's a good property, we'll still see multiple offers. But the hottest part of the year is always around the springtime. As you see the January, as soon as January starts, the demand just go up pretty fast. However, a lot of our clients always think that summer is a really hot real estate season. As a matter of fact, summer is usually a bit slow. But every year we have a different time frame when it starts slowing down. This year we start slowing down around May. Typically, we see slowing down around June. Last year, in 2025, we saw the slowdown starting in April. And that's all due to some economic factor that's happening on the market. And so that's where we come in and really educate our clients and let them know what we see firsthand on the field. So this is what we're seeing right now, that June of 2026, the demand has come down slightly, is not too much yet. But we definitely start seeing some of the listings coming down. But I want to show you a little bit more data on why are the listings actually have less listings towards June of 2026. All right. So here is we talk about the months of inventory. Right now, we actually have less than 2 months of inventory, which is stronger than last year's summertime. Even though it's not a lot, but it's still rather strong, especially if you're comparing to the rest of the country. Again, every time I talk to my clients, talk to our audience, always have to remind them that you can't really watch the national news about the real estate market and assume that's what's going on in the Bay Area. Bay Area, we do have a very unique real estate market, and that's why I always find it very important for us to show exactly what the Bay Area market is doing compared to just watching the news. All right. Next slide, we are looking at the median days to sell. As you can see that the longest days to sell was around December and January of 2026. So remember when we recorded January 2026 numbers, that was basically the listings that went into escrow in December because it takes about 30 days to close. So it shows that around basically November and December, the property stayed on the market the longest. And it was, of course, the shortest as expected. It was around the springtime period. Basically, January until about April will be the fastest. And then what we noticed is that around April and May, it came up a little bit this year. Typically, as I mentioned earlier, we start seeing slowdown on the normal market. We start seeing a slowdown around June. But this year, we are slightly ahead of schedule. We slow down a little bit earlier than a normal market. The reason why I keep mentioning normal market because last year we slowed down even sooner. We slowed down in April. So that's why I keep saying like normal market because last year was different and this year is a little different as well. And in terms of competition, if we look at the 5 counties, and then you can see that we are still actually bidding above asking price. The market over here is still relatively strong, again, compared to other part of the country, and especially around March, which means like around basically properties that went into escrow in February, it went 9.3% over asking price. And this is a aggregate of all 5 counties. And then we see that in April, May, and June, we still have close to 7% over asking price in terms of the sales to list price ratio. Now, but if we are just looking like separate the 5 counties out, we're looking at the 5 counties. San Francisco, the days on the market, it was average about 12 days on the market in the month of June. Alameda was 13 days on the market. San Mateo's 12 days on the market. Santa Clara County is 11 days on the market. And Contra Costa County is 13 days on the market. They are not too big of a difference, but of course, we still see that Santa Clara has a pretty strong days on the market compared to the other counties. But if you look at the sales over list price ratio, you see San Francisco County has a huge lead compared to the other counties. Is 25% over asking price, while Alameda has 10%, San Mateo is 6.7% over asking, Santa Clara County is 3.2% over asking, and Contra Costa is 2.8% over asking. I think a lot of you have heard on the news already that there are quite a bit of changes in San Francisco. And San Francisco has this really bad reputation for many years since COVID. And at the time, everybody was kind of thinking like there's no hope to San Francisco. But this year, my goodness, this year we really start seeing some major changes. And if you're asking me, but because I always do these market research, if you're asking me where is the emerging market right now, I will have to say San Francisco is definitely the emerging market right now. Although back then, it wasn't one of my favorite cities to recommend clients to invest in. But this year, I would say San Francisco is definitely one of the markets that I think you should be able to get in at the bottom as we are starting to recover. All right, so, and then you see that we have news keeps saying like sellers are pulling homes off the market at the fastest pace since 2020. And we did see that. And as a matter of fact, there was another news article that talked about San Jose was the number 2 highest listings taken off the market. We did see quite a few listings staying on the market a lot longer time. It takes a lot more for a buyer to really decide to purchase a property. So properties that have a little bit of more of a defect, I would say, for example, if the location is not as good or the floor plan is not as ideal, or is not as remodeled, those would stay on the market a little bit longer. But then if your house is in a good location and has been remodeled, relatively updated, those still go really, really fast. So buyers are willing to wait around a little bit longer, but if your property is good, I still see property go off the market within a week and also bid above asking price. So in terms of pulling off the market though, you see that compared to January, February, and March, we did go up quite a bit compared to the previous months. And but San Mateo is about 125 in June compared to 141 we peaked in May of 2026. And then in Alameda, we peaked in June at 450 listings, and then San Francisco, 115 listings, and Contra Costa County at 387 listings that pulled off the market. So yes, but then those are the properties that you're probably going to see at some point is going to come back onto the market as well once the market comes back. So I think right now a lot of people are really just waiting to see what the economy is doing, and of course reading a lot of headlines to understand like whether we have a consumer confidence coming back into the real estate market. And in terms of like list price decreased, I am a little surprised though that we have less list price reduction compared to May, quite a bit less than May. Now, I'm not surprised in terms of like why May was so high. We talked about it during last month's webinar. It's like in April, the war started. There was a lot of news about like, the gas price has gone up, interest rate is going up. So we thought at the time that the list price or buyer is going to react right away, but they didn't. They actually kind of like had a delayed reaction until May, because that's when they realized that, wait, the war is not stopping anytime soon as expected. So in May, that's when we started seeing a lot more buyers pulling out of the market, saying like, you know what, I'm just going to wait and see. So we did see quite a few properties drop their prices. In Santa Clara County, there were 734 listings, and in June there were like 651 listings. And San Mateo, it was 197 listings, and then in June of 2026 was 172 listings. And Alameda County is around 510 in June, and then San Francisco is only about 87 compared to May is like 122, and then Contra Costa County is actually has a little bit more, 674 listings. So again, as you see that we do see San Francisco is relatively strong. They don't have as many listings that drop their prices, because we do see San Francisco market has been pretty strong lately. Now, median sales price here, we have this chart that charting the sales price since 2022. And that's, again, when the interest rate went up quite a bit. And you see this almost, well, I don't want to say free fall, but it did drop quite a bit in 2022, all the way down here. So as you see the purple line, this one is actually for San Mateo County. And then the blue line is Santa Clara County. The green line is San Francisco. And the yellow line is Alameda County. And the red line is Contra Costa County. So if you look at San Francisco, for example, it starts on the second line right here, right? And then when at some point it just kept dropping, and it goes up, but then it would drop quite a bit. So it was a lot more fluctuations compared to the other part of the counties. Well, San Mateo has gone up quite a bit. It came back down, but it also come back up pretty strong. And then Santa Clara County, it dropped a lot, just like the other counties, but then it has been pretty stable and has these like high, you went up really high, but then it comes back down a little bit, and then it comes back up again, as you see in the beginning of 2026. So the number just kind of like keeps staying up there until that, where if you look at San Francisco now, it goes all the way up closer to San Mateo County, while the Santa Clara County numbers have come down a little bit. And then on the other hand, if you look at Alameda County, we kind of did not go back up to where we were in 2022. It just kind of like it dropped, it just kind of stayed down here a little bit, go up a little bit, but it didn't really go back up to the 2022 number. And then same thing over here for Contra Costa County, we are just slightly below the 2022 number. So as of June of 2026, Santa Clara, the median sales price is at 1.91, and San Mateo County is at 2.15, and Alameda County is at $1.32 million, San Francisco County at $2.15 million, and also Contra Costa County at $905,750. All right, so what does it mean? So as you see that we talked about like the lowest ones, 2022, and it dropped quite a bit. And from now, if we compare to what how much it has gone up since 2022, the lowest point, we actually has gone up about 30.38%. But if we're looking at the peak number in 2025, we actually went down about 11.16% for Santa Clara County. And then since last year, as we went down about 8.17%, and also went down about 6.83% compared to last month. As for San Mateo, it actually have gone up 39.7% since the lowest point in 2022. But then since last year of 2025 peak number, still up above the last year peak number at 4.4%, and went up 7.5% compared to last year. However, this month, basically all across the board have gone down, but this one only has gone down about 3.15%. And then Alameda County has gone up 25.71% since the lowest point in 2022. And since the peak of 2025, it has come down about 1.93%. And since last year was 1.54% increase. And but again, from last month, our number has dropped about 4.35%. And San Francisco went up 38.71% since the lowest point in 2022. And this one is incredible. It has gone up 19.44% since the peak in 2025. And then compared to last year, year over year, is at 26.28%. So again, this is what the news is talking about. It has gone up quite a bit compared to the surrounding areas, even though it did drop compared to last month, but we have expected that, and it's only dropped about 2.27%. Now, while Contra Costa, since low was at 19.97%, and then did go up about 0.64% since last year peak, and year over year went up about 0.64%, and then since last month, it has come down about 1.55%. So hopefully this gives you an idea of how each counties are performing, because I know a lot of our clients are also debating where they should be investing in the residential market, which county they should go. So I think this would be a very good chart for you to look at. And then now a lot of these demands also depends on mortgage rates. So mortgage rates are expected to remain pretty stable across the board by Fannie Mae, Mortgage Bankers Association, and also Wells Fargo. They're all expecting about 6.4, 6.5% range. We're not seeing a big drop in terms of the interest rate, although I think it really depends on the news. There are a lot of news coming up, headlines coming up, talking about inflation. So we will see. I to be honest with you, even though we track their projections every month, however, I'm not really 100% relying on their numbers, because I still look at what's going on the market, so that to understand the psychology of the consumer, because the expectation of where the interest rate is going to be makes a huge difference to the market. And all right, so this is what I was talking about, that, the news headlines, you see this is just yesterday. It says the mortgage rate rise to the highest level in nearly a year, causing home buyers to pause. So what it's saying is that last year, August 2025, it was at 6.63%, and then now at this time it's over 6.63%. So that's why it says like it's the highest, but it's not higher than last year, July. So as of yesterday, from Wells Fargo, their 30 years jumbo mortgage rate is at 6.625, but APR, another reminder for our audience, for our consumers, is that always check the APR, not just the interest rate, because APR includes the closing cost and the fees the lender charges. So make sure you check whether compare the APR instead of just comparing the interest rate.